Welcome to the Real Estate Rundown. We have some fresh off the press data from the National Association of Home Builders. They just released their monthly builder sentiment survey, and it came in at the third lowest reading since 2012.
Wow.
Builders are not feeling so confident right now.
2012 was pretty, man, it was like me.
Not a
very good year.
Not a very good real estate market.
Everything was really slow. It feels like 2012.
Yeah, well, I feel like the resale market started to bounce in 2012, and that's because prices were just so darn cheap. Remember, you could get a ton of house, but there was it did that little this, and then it kind of went down and then went level for a while.
Right. We saw just kind of sideways
Yep.
for many years, and
Yep.
then of course we know what happened after that. I think the takeaway though is, check this out. 37% of builders reported cutting prices in June. It was the highest percentage since the National Association of Home Builders began tracking this figure on a monthly basis. So,
are they cutting prices, or are they giving incentives to buy? Because I haven't seen too many builders cut the price, because then they screw themselves.
Yeah,
if they cut the price,
right.
then
Absolutely,
all
they
the
screw themselves.
the home sales that they sold. You know,
they're pissed.
It's not a good thing to
Yep.
bring the base price down. But if they can go, okay, well, you have a $50,000 incentive, and you can use it for upgrades, and
Yep.
now next month we get a $60,000 incentive, $70,000, but the base price still stays the same.
Yep. Start offering crazy amount of concessions, buy down rates. Start offering 8% real estate commissions. Right, these things that we've all seen.
And they don't have to play by the same rules as like the appraisal, like it's a normal appraisal. It's
No,
like
they don't.
The cost
That's the part
appraisal,
that-
right?
yeah.
And so, I mean, it's.
So is there a little bit of manipulation happening?
It's kind of artificial, if you tell me.
Yeah.
The
It is not
artificial
fair
home price?
game, right?
Yeah. Huh.
Well, I guess
But-
that's the beauty of the new build. You get to play your own game.
Yeah, I guess
That's exactly what Jay's saying. Like, you get to
And
make your own rules.
You get a toilet that nobody has used, which is kind of cool when you're moving into a new home.
Or certain builders.
Well-
You want a doorbell? That's a charge.
it may have been used
Yeah.
by some
the
of
contractors.
The contractors.
Like,
They
let me
blew
test
it
this
up.
thing out.
That's why they bring the cleaners in like 2 or 3 times.
Final clean.
I had a client once that would refer to resale homes as used homes.
Wow.
And she would say it's a used home, and she definitely skewed towards the new build. So is buying a new build probably your best strategy in this market if you're looking to buy a house?
I would tell clients to really negotiate heavy on those new builds, because I think they're going to be a little bit more desperate right now to get something sold.
Okay.
Absolutely. And not only that, like, the one thing I want to highlight is, depending on the community, there's a lot of new builds. People forget the fine print. The fine print is, hey, you got to go put blinds in the house. Hey, you need to go spend $20,000 on landscaping your backyard, right? So even though your payment is what you want to be, maybe you don't have the cash to do those other things. So now you're dealing with dirt in your backyard for the next 5 years while you save up to get it landscaped, right? Depending on what your price point is, what your circumstances are. But I'm just saying that I think so many people get, enamored with
The model home.
Yeah, the model home.
That's what they get
right?
enamored
And
with.
that's
That's
another
not a
great one.
$20,000
Paint your house.
backyard.
Yeah, exactly. Yeah, that has a $100,000
That's
backyard.
a $200,000 backyard, not a $20,000 backyard.
Exactly, Jay.
You put some rock back there for $20,000.
Right, and how they're painted and staged and decorated. Well, stage decorated, same. But you're right. They're selling the dream, and you think that's what you're going to get, and all of a sudden you walk into the
It is not what you get.
white shell house, and you're like,
This one looks a little different.
Feels
Is this
a
the
little
same floor
different.
plan?
It just doesn't have any furniture in there, right?
yeah, that's all it is. It's just furniture. Yeah.
$50,000 kitchen versus the standard kitchen's different.
Big difference. The kitchens do it for me. Okay, but back to the artificial inflation of prices, or maybe not inflation of prices, maybe just keeping them artificially high,
yes.
with these buy downs. So I was talking with one of our top agents yesterday. She had come into the office and she was sharing that she had just sold a new build and she couldn't believe it. I mean, she was stacking. She was like listing off all of the things that the builder did for her and the client, like rate buy down, extra incentive, a Ring doorbell. And she's like, and they even paid me a 4% commission.
Yep.
Right. So she's like listing all this stuff out. But she was talking about the rate buy down, and she was saying how it was just so attractive. It was amazing. And the reality is like that buyer is paying for it in the price of the home.
100%
They just
they are.
don't realize it. So what is that doing to the value of the neighborhood? Is it keeping it high? When these houses turn in 3 to 5 years, what's going to happen? Are people going to be in negative equity situations? Are they going to have like a situation where they can't sell? Maybe short sales start coming. I mean, it's really interesting to think about.
It's another 2008, right?
Yep.
I mean, you have a lot of these new build communities that
Yeah.
they're upside down in, or they have to refi because their 3-2-1 buy down is coming up, and we don't have low rates for them to refi.
Yeah.
And they can't sell it for what it's worth. Yeah, there might be some problems.
Speaking of
trouble in paradise.
I can think of 2 leads that we've sent out from Seller Source recently where the agents have been in discussion with the homeowner, and they're like, hey, this is a short sale. So that's
So
and
short sales coming back.
Yep.
Well, okay, let's talk on that for a bit because we happen to have 2 subject matter experts in short sales. Keith and Elliot were both, real deep. And Keith is
long
like, oh
time
man,
ago.
it was a long time ago. But all we know, what do we know? The pendulum swings both ways, as
Absolutely.
you're saying, Keith. And so, if short sales are coming back, what would your advice be to agents on how to navigate those?
Well, the thing though is I mean, how is a bank going to react to that? I mean, they used to have their own systems and processes and offers, or not offers, departments that they built specifically around that. So, I mean, really, I guess it would just come down to have you talk with the bank and what's their process? What's the timeline going to be? Because I would imagine it's probably not that smooth these days.
No, because there's no infrastructure typically at this point in the game so early on. If we do see a bunch of short sales, banks and servicers are going to have to create those departments again.
Yep.
Yeah, well, that would be my advice.
Oh,
though, is
100%
you
they
contact
will.
the bank
Loss
first
mitigation.
and find out what their process is before you do anything, because you might be like, well, is this going to be a year process, or is it 90 days because they don't have a lot going on and they can kind of bust things out? I mean, who knows?
Yeah, so I actually kind of have a deeper, cool pro tip on this one that I think a lot of people don't know and don't understand. And that is actually don't turn your cheek to short sales right now, because these are actually the ones that you want. The reason being, so they've always had loss mitigation departments. And the first thing is as a servicer, keep in mind, the money's not sitting with Bank of America. It's not sitting with Chase. It's not sitting with whomever they're paying most of the time. However, those servicers, they give them decision-making authority if the loss is within a certain percentage, and they fly through quickly. It's only when the loss, in most cases, and it depends on the portfolio and where it's sitting, if it's Fannie, Freddie, et cetera. But a lot of times when that loss is only a certain, smaller few percent, they will have authority to sign off on it, and it goes way quicker than them having to submit for approval. That's when a lot of times it'll drag on, and you have to escalate to Fannie, Freddie, et cetera, right? Like that's what we all went through, is those losses were so great that they all needed, lender approval on them.
Okay, so let's say that you go on a listing appointment and the homeowner is upside down, and it's a short sale situation. And they're looking at this and going like, I'm upside down. Maybe I just quit making my payment. Times are tough. What would your advice be to the homeowner? Should they stop making the payment? Like, will the servicer take you serious if you're still current? Because like, if you're still sending a check every month, are they as likely to work with you? Or do you have to take that hit on your credit and not make your payment? Or maybe by that point, the person's already in trouble anyway, and they don't even give a rip. But what would the advice be to that homeowner on making the payment? Should they keep doing it?
I think at the first time, the first thing that they should do is go to the loss mitigation and try to reach out to loss mitigation, right? And whatever their hardship is, if they have to have a hardship.
They do have to have a hardship.
They're not. If you have your job and you can make a payment, you're not going to get. And then they're also, what they're going to do is they're going to send out an inspector, probably do a drive-by. Right, so you want to make sure your lawn is really tall and your weeds are big. Your pool might be green.
But just trash.
This is when you want to get letters from your HOA.
Yeah, because I think they want to see like, okay, is this going down?
Yeah, they're going to do a drive-by BPO for
and
sure.
will the property kind of start to have some problems,
Have signs.
Yeah,
Okay.
it's value. It's not good, right, to keep it like that.
So there needs to be like hints.
A few hints. You can't have like the nicest lawn. It should be like perfect manicured and be like, yeah, I'm in a short sale position. Well, who are you paying to do your lawn?
Yeah, you got to remember the loss mitigation department is not mitigating the homeowner's loss; it's mitigating the bank's loss. So if there is no signs of hardship, the chances of them saying yes is no.
Yes.
So I guess that's one of the first things you should ask the client or the home seller is like, what is the hardship? Are you making your payments? Did you lose your job? Was there a death in the family? Do you have to move or something? Or sometimes they have to move for their job and they have to go somewhere else, and they're either being transferred or fired, so they got to transfer to some other place. And I think I think banks will definitely look at that as well.
Well, and you bring up a good point with the job transfer, because that could present a hardship, especially when you think of like the reshuffling of America that happened during the pandemic, and then a lot of people are being called to return to work.
Got to go back to the
and
office.
So they have to go back in office, and that's not always where they live. And so a lot happening on that front. And it makes me think about how selling real estate in today's market, you truly have to be an advisor on many different things. You can no longer be this like one trick pony where, all you do is help like the traditional path, because if that's who you are, you're leaving out a lot of folks. Interesting.
Yeah. You do need to be advisory, right? There's like a lot of times that, it's a joke of a meme, right? For like real estate agents that they have to be marriage consultant. They have to be a therapist,
designer,
food guru,
a marketer,
exactly.
all the things.
All the different hats that they have to wear. But it's also true, right? I mean, it's at the end of the day, it's about relationships, right? And so meeting your client where they're at with whatever and wherever they're at, I think is really where that piece kind of comes into play.
Yeah, I like that phrase. You use that a lot, meeting them where they're at, and absolutely the truth. Hey, in other news, if we were to meet Open Door where they're at, they would be at 55 cents a share. Open Door has indicated that they will be doing a reverse stock split so they can get that share price over $1. Also, we talked a little bit about how they settled that class action lawsuit from investors for misleading them on their pricing algorithm. And it turns out the amount of the settlement was $39 million.
Wow, that's like 10% of their market cap.
Good point. What's their market cap at right now?
About $400 million.
Wow.
So, and then OfferPad's market cap is like $27 million. So that's even more than their Open Door's settlement is worth more than what OfferPad is worth.
Yeah, and it makes you wonder too. And I'm like, how much of that 39 million is actually going to the investors? What 50% of that just lying? 50% of the attorney. Yeah, baby, we made out.
Yeah.
So true, Keith. I didn't even think about that.
Each investor gets back like $1,000.
Yeah. Thanks.
I mean, it'd be more than the sellers are getting from the commission lawsuit settlement.
Yeah.
That's for sure.
So what do we think agents think about these companies like losing so much market cap? Or do they even know?
I think they know, and I think that by and large, agents are excited. I think that what happened was...
They're vindicated.
Yes.
Yeah, they're vindicated.
When these companies came on the market, I mean, you got to think, Open Door wasn't so blatant with the agent, but when OfferPad arrived on the scene, man, they were hostile to realtors. I mean, look what they did to OfferPad. Look what they did to us. They sued us. Like, let's be real. That's insane. I mean, they were so anti-agent.
But then they weren't, though.
And
they tried to act like they were.
I'm the only big dog out there.
Yes, yeah. Yes. And so I think the agents are happy. But here's the reality, though. If we were in a different real estate market, this wouldn't be happening. This is like macro conditions dictating what's happening.
Yeah, we've had some massive swings from the upside, going up and then down and sideways, and it just goes to show that some of these business models are just really hard to pull off.
They're susceptible.
Well, trying to automate an evaluation and an acquisition of a property that's alive, right? Because we all know you could have property A and property B, and on the outside they look, and statistically they look the same, but the DNA of the property is very, very different, and they're not going to resell. And so trying to do that, I think that's where the expertise of an agent comes into play.
Well, yeah, truly it is. And obviously, it's not an algorithm, and the algorithm does not work. Yep. And it wasn't really even an
Well,
algorithm.
and
It
this
was-
is what it's the plaintiff's court filing said that Open Door misleadingly portrayed the company as a tech disruptor that used AI-powered algorithms to buy and sell homes more profitably and efficiently than other traditional real estate companies.
It was like that. Who was that lady that went to jail for her blood testing?
Yeah, the Theranos lady.
Theranos. Yeah.
Yeah.
We're like, we could take a drop of blood,
Elizabeth.
and do all of these tests.
Yes.
And we can get all these tests done, and you would tell you.
And
they-
behind the scenes, it
behind
was-
the scenes, they were taking like gallons of blood from people, like sending them up and saying, "Yeah, we only took a drop of blood."
I went deep into that story a few
yeah, it
years
was
ago.
it was
pretty
on Netflix,
fascinating.
right?
Yeah.
Yeah.
Did you guys watch it?
No, I don't
Oh,
even know what you're
it's-
talking about.
Oh, this lady, I mean, talk about like a masterclass in scamming investors.
Yes,
She
sold a bill
was
of goods.
insane. And yes.
But I
and-
think she was a little bit like cuckoo, like a little mentally ill. I think she's just like one of those tech people that
Did
thought,
she have
thought
like
they-
she have a touch of the schism?
Yes, I think so. I think she was a little bit mentally ill. Really thought that she could pull this off, and she was telling people that it was already pulled off, but then she couldn't pull it off, type thing.
Okay, but back to Open Door and OfferPad.
Yeah.
I think that for me, the hard part about seeing their stock so low and seeing their valuation so low is I really believe in what they're doing. I just believe that it needs to be agent assisted.
So does the public, though. And the reason being
Yeah,
to me is
true.
when you talk about just the sheer fact, you can hate on Open Door all you want to. In their depressed circumstances, they still acquired 15,000 houses last year.
Yep.
Like when you think about that across the country, the feet, right? Yes, they have a lot of problems to solve, but as far as meeting the public where they're at, the demand for an instant sell, easy home acquisition, the consumer has spoken, and it is loud and clear.
It wants it. They want that liquidity out of their house as
Yes.
fast as possible. But I mean, I've run into a couple Open Door houses where
Yeah, you're
they've
doing-
been on the market for a year.
We're gonna take a
and
bath.
I'm looking at what they bought it for, and they're taking like $2,000-$3,000 price reductions. I'm like, this ain't gonna cut it. Like, you're $100,000 over market price, and you're gonna lose your shorts. So there are several of those out there, and you just wonder how many.
But there's
Are
also
out
the
there.
reverse too.
There are,
it's
but
not
those are
like
the ones selling, and
it's not like every seller that sells to Open Door got a good deal. Like that's ridiculous.
No.
no, because you
No.
see the opposites when you're looking at.
Yeah, you
comps,
see the
too.
opposite.
You
You're
see
like,
the
oh my
ones where
gosh,
you're
can't
oh
believe
my
they bought it
gosh,
for
like-
that.
Yeah, like Open Door makes a killing. I mean, we look at their embedded margin, and they definitely
Mm-hmm.
have a steep embedded margin. So are those the outliers?
Yeah, I think there's definitely outliers, and I think there's just some areas in the country where it just got hit hard, and even this past year, where the values just kind of tanked,
Oh, yeah.
and then all these people put their houses on the markets, and then they're all trying to compete against
Yep.
each other and lowering their prices. And if Open Door got caught in some of
Yep.
those, they're
Yeah, they bought on where the market was at, but they didn't see the forecast of too many properties coming on and competition and price reductions, et cetera. You know, the other thing too, I think that people forget is just how expensive it is to run an organization like that, a company, the office space, manning the teams, right? Because that's where a lot of that money goes. Right, is all the people. That's where I think you had shared with me, Jay, a couple days ago that they're due to report a profit this quarter, but that has a lot to do with all the layoffs.
So Open Door just laid off 40 people, not a huge amount of people, but they did just lay off another
Still a
round.
decent amount.
Yeah, it is. What's interesting is we're hiring here at Zudilio, and so during the hiring process over the past couple months, I've been meeting with a lot of folks that work at Open Door, a lot of folks that work at OfferPad, a lot of folks that work at other real estate companies, and I'm like starting to see trends. I'm like, that company is either going out of business, merging, or being acquired. Like this company is struggling. Like you start to get a pulse of what's happening in other companies by who is applying, and it's actually really fascinating. I thought about it. I'm like there's one company, and I won't say their name. But I told Jason the other day, I'm like, something is happening. They're either merging, acquiring, going out of business. Something is happening.
they gotta be
because-
merging.
Yeah, I would say merger.
being acquired.
Yeah. Which and sometimes the acquisition or the merger is basically the save from going out of business.
Yeah,
Oh, yeah.
exactly. And
It's
we've seen that and time again where company gets acquired, and you're like,
Yeah.
and if they don't tell you how much they got acquired for in the article,
Yeah.
Chances
Then
are
it's zero.
It wasn't very good.
It wasn't a very happy acquisition. Yeah.
No.
Very valid.
Well, there are still 500,000 more sellers than buyers in the market, which is insane. So definitely buyer demand has waned somewhat. But sellers are pulling their homes off the market. So for those that aren't, and that's the thing, like if you don't need to sell right now, don't sell. Like why would you test the market right now?
We got to put that in perspective for the viewers, listeners, because just because I know the numbers, that's a crazy amount. So on average, there's about 1 million homes for sale across America. So when you have an overindulgence, that's 50%. We are talking about seriously, potentially longer marketing times in certain markets. Wow. That's a lot.
Unless you're going to buy. But
Yeah, buy. But even then, money.
If you have a low interest rate, it's really hard to sell.
Well, maybe Jerome Powell will lower the rates. It's due next week, right?
No,
Well,
tomorrow.
they're meeting tomorrow,
okay.
but they're saying
He's not gonna
probably
lower the
just
rate.
going
Nah.
to keep it where it's at.
Yeah, they're not. In fact, I looked on the poly market because I was curious, and there's like a 3% chance. And then like the July meeting, there's like little chance. Even September meeting only has a slight chance of a cut.
I think there's going to be a little bit more dovish tomorrow due to the war happening. Yeah.
Is that
Try to not
throwing
to
a wrench
spook
in
the
things?
markets. No, it might. I mean, if he's more dovish, then it's going to rocket the markets, I think. So, but they don't want it. He doesn't want to be.
Do you guys hear that?
Over the top.
It's the money printer.
Oh, it's the money printer.
It's being fired up.
Freaking well, they're. I'm sure that's going to happen real soon.
Yeah.
Has to. Has to.
Yes,
Happy pretty much.
the new Jerome Powell is supposed to come out next year, right?
Mm-hmm.
Yep.
Yes.
So are we going to have like
It'll be
a nomination?
It's going to be a nomination, and I'm sure that nomination is going to be somebody that is going to print money. They're going to.
That's
they're
the
gonna
only
print
way
like
out of it. At this
$3
point. They're
trillion
going to have to
or
print their
something
way
like
out
that.
of it.
Yeah, they're the print. I mean, I think we're going to see 0% interest rates.
Do
I
you?
don't know. We'll see. We'll see what happens.
0%. That would be wild.
Depends on how bad the economy gets over the next year.
Well, hey, Keith, do you have anything in the crypto Bitcoin space interesting or?
No, not right now. I mean, yes, it's cool because of where it's at, but honestly, the market's pretty boring overall. It's just
reminds me of that meme.
It's just a pump back down, pump back down, pump back down, and it's causing everything else in the marketplace to react even further. So like what they call altcoins, like your Ethereums, your Solanas, your XRPs, they're going down further than where they were at relative when Bitcoin was where it was at before. And they just they keep getting lower every time Bitcoin goes low, but then pumps back up. And Bitcoin is just kind of doing its
rebounds.
and the other one, it's a weird, honestly, I didn't expect the market to be where it was at right now. I thought it'd be higher.
So you thought the altcoins would, when they went down, they'd go back up
Yep.
correspondingly to Bitcoin,
Yep.
but it's not tracking.
That's how it was before. And that's not what's happening right now.
Well, and I keep hearing, Bitcoin's going to go, it's going to, reset a little bit and go back down below 100, right? Because we've been at above 100 for like 40 days, basically. And with, now the war and everything else that's gone on, I'd say it's bucking the trends of the economic, or not the economic, world issues, right? Because a lot of times it can reflect the world issues that are going on, but it's been bucking it. I mean, I know it's had a little bit of a tumble today, but I mean, shoot, it pumped to like 109 yesterday, which caught me by surprise.
Well, as Michael Saylor bought $1 billion worth on. He put out that on yesterday.
Yeah.
It's another 10,000 coins. He just keeps every Monday. It's like,
Yep.
By the way, Michael Saylor was on a podcast with Jordan Peterson. Did you guys watch it?
I have not watched that yet. I started watching
really
it.
good.
I haven't watched it. I've heard nothing but just, oh my gosh, you have to watch this.
It was so interesting. So at one point, Michael Saylor's really big into AI. I mean, like who isn't? We all know it's like a productivity hack. So when we were at the Bitcoin conference too, it was one of his 21 laws of being wealthy was use AI for everything. Well, anyway, in the interview with Jordan Peterson, Michael Saylor is talking about AI as being demons and angels. Yeah. And Jason and I are like, wait, what? And he's like, this dude has a really crazy imagination, but to think about.
Wait, Saylor said that or Peterson said that?
Saylor said that.
Okay.
It was so bizarre. And we're going like, AI is a demon or an angel? And you're just like, wait, what?
That's interesting. I would expect that
Crazy.
more out of Jordan Peterson because that dude's super. I don't want to call him religious, but he's very, very biblical,
Spiritual.
biblical. Yeah.
It was really interesting. Interesting conversation.
Very interesting. Yeah, I have to catch up and watch that. Like, I'm glad that you brought that back up because it's like, I was like, oh yeah, I got to watch that, and I slept a couple nights.
Well, you need some sleep. It's
Yeah.
warranted. All right, guys, what are we excited about? What are we looking forward to coming up?
I'm looking forward to Bitcoin at 150, 180
By when?
by the end of the year.
Yeah, it's definitely going to happen.
Yeah.
Okay.
I think once the administration, am I allowed to say that?
No.
Okay, you can cut that out. Once they name the new
Fed chair.
Fed chair, I think that will
Cause a pump.
cause a pump because what the market does is they look at the future, right? So if they can go, okay, when this guy comes in, we're for sure going to get massive slashes to the interest rates
And an injection.
Yeah, and an injection in capital, and that's what's going to pump the markets, and the markets will be there. I mean, they're usually about 6 months behind the news, so I think before the end of the year, that nomination is going to be known, and that nomination will definitely be cutting rates.
Okay, so Jason's looking forward to 150 Bitcoin.
180.
180.
Yeah, I think I'm with you. I think 180 is actually where it's gonna. I think it'll have a really solid run.
Okay, what are you guys looking forward to?
For me, I'm going to keep it more in-house. I'm looking forward to the continued success month over month and adoption of agents within the Zudilio platform of the Cash Plus. I mean, we've just seen an explosion of agents clearly resonating with it, using it as a value proposition, as an additional option, and now more homeowners are accepting it, which just makes 100% sense, especially in this market. So I'm looking forward to the continued rise of the Cash Plus because it's like having that feeling. It's like we're taking over, and it's cool.
Well,
It
just
is
the
cool.
the widespread adoption and just really seeing how many problems it solves. It's such a unique thing, right? Where all of the bucking the trend of the open door or the offer pad, right? Where they want to buy your house and people are worried about getting fleeced out of their equity, where this is a product of convenience, ease of cash now, but still the upside of the open market. It's you win on both sides. One sale, 2 payouts, right? It's kind of a no-brainer.
And agent assisted.
Yeah, and agent assisted.
You don't have to feel like you can't have your agent involved. Your
Yeah.
agent is the cornerstone in helping guide you through it.
Totally. So for me, what I'm excited for, I'll actually give us a shout out because I think that it's not as much known. Most people know Zudilio for the cash offer network that we have created. But we've actually created leads recently
'Cause we're
and
crazy.
seller source. So it is really cool. It's like watching a child grow where, you're like, hey, this is concept, this is risky, because you want to stick to your core models. But then being able to build the cornerstones and the foundations of what we're doing and the time that we've been able to do it, the ad campaigns that are running, the nurture sequences that are running, seeing agents starting to have success. I just mentioned, a couple of, whether they be short sales or not, right? There's a ton of other stuff that's going on. And just really seeing agents convert leads and add to their gross commission income in a time of need is a really cool thing. So I'm really excited for that to continue to take root, and not only for Zudilio to be a part of their business, but to become a cornerstone in their business.
I love it. All
Yeah,
good
absolutely.
things. All good things. I will add that I'm looking forward to hearing from you. I love when we get comments on our YouTube and I go in there, I respond to them. So if you have anything to add to the conversation, drop it in the comments and make sure to give us a like, subscribe to our channel. 20% or less of our listeners are subscribed. So give us a sub and hit that notification bell so you get updated of our new episodes.